Start, madam.
Okay.
Thank you.
Good afternoon, students. Welcome back to TRVI Society accounting classes. In last session, we have discussed about the first chapter from the first unit, that is bookkeeping and accounting. Now coming to the second chapter, recording of business transactions. So we have learned the accounting cycle. What is accounting cycle? It specifies the systematic recording of transactions, systematic method of preparation of accounting. So completely starts with the recording of business transactions, and then we will post to ledger accounts, and then it is again prepared. After ledger accounts, we prepare trial balance, and the fourth step is final accounts. So that is what about accounting cycle. Accounting cycle starts with the recording of business transactions. So coming to the recording of business transactions. So under recording of business transactions, usually system of accounting. What is the system of accounting we follow? System of accounting refers to the two system of recording the financial transactions in the books of accounts. These two systems are the single entry system and the double entry system, that is dual entry system. So system, what is the system they are adopting? So the business organizations or the firms, what type of system they are adopting? What is the system they follow? So under system of accounting, we have two systems, that is single entry system as well as double entry system, that is dual aspect. Or already we have learned the dual aspect concept. What is that concept? Dual aspect concept that comes under concepts of accounting. So coming to the system of accounting, we have single entry system and double entry system. Under single entry system, this system is also known as pure entry system. It does not follow traditional dual recording format. Instead, in a single entry system, only a cash book will be maintained. So under system of accounting, the firms can adopt either single entry system or double entry system. Under single entry system, it is called as pure entry system. It just follows only cash book. So cash book is maintained to record cash transactions, the amount of cash received and the amount of cash paid. All cash transactions will be recorded in the cash book. No other ledger will have a place in this system. So as we learned the accounting cycle, we record the transactions in the journal entries, and the next step is ledger accounts. We classify each account according to the nature of that account and again post into the ledger accounts. Here under single entry system, they will not follow the ledger accounting. And all transactions of personal nature are simply recorded in a rough book. The transactions related to persons, if we receive any amount from persons, if we are paying any amount to persons, that is personal dealings. When the persons are involved in the transaction, then it becomes a personal transaction. So it is recorded, the personal accounts, the personal nature of transactions are recorded in a rough book. Usually they maintain the cash book, and any transactions related to the persons, they record in the rough book. As you can notice, this method is not very scientific. So it is rarely used in the modern days. So we use the single entry system only to prepare final accounts from records that are incomplete for some reason. Some other salient features of the single entry system are, since only one cash book is kept, personal and business transactions will be recorded together. Here, under single entry system, it is also called as incomplete record. We call it as accounts from incomplete record because we are not giving full information. We are not preparing the systematic method of accounting is not followed here. Under single entry system, it is also called as pure entry system. We are just taking into the consideration of cash book, only cash dealings. cash receipts, cash payments is considered here. So it is called as single entry system. It is incomplete. We are not following proper way. Proper method is not followed here. So some salient features are the only cash book is kept. Personal and business transactions will be recorded together. All the transactions related to personal and as well as business transactions are kept in a rough book. Real and nominal accounts are ignored in this system. We will come to know what is real account and nominal account under double entry system. Double entry system is a systematic record of transactions. So here real account and nominal account is ignored completely. They will not follow real account and nominal account. Profit or loss can be ascertained, but we cannot represent the financial position of the organization. So how much profit earned? They can just ascertain the profit earned, but it will not represent the financial position of the organization. No trial balance is prepared. So arithmetical accuracy of accounts cannot be verified. So why we prepare trial balance? Trial balance is prepared under double entry system. So the one who is following the systematic way of accounting, they will adopt double entry system. Under double entry system, we prepare trial balance. Trial balance is the third stage under cycle, accounting cycle. In accounting cycle, first is the recording of transaction, that is entry made in journal entry. And next is ledger account. We post into the ledger accounts. After the ledger accounts, the summary of debits, the summary of credits. That is, debit must be equal to credits. That is the statement of trial balance. So then we will get the arithmetic accuracy of accounts. So debit must be equal to the credits. That is the arithmetical accuracy. Arithmetical accuracy that we show in trial balance. Under single entry system, this arithmetic accuracy is not followed. So it is about single entry system. Coming to the double entry system. It is about the system of accounting that we adopt. Usually the organizations adopt the single entry system is followed in sole trader proprietorship. Sole means a single owner. If the business transactions is not much. So only limited transactions. If the investment is not much. So the sole traders usually adopt this system of accounting, that is single entry system of accounting. Coming to the double entry system. This system is a more traditional and conventional system for recording transactions in financial accounting. This is a scientific method which has some rules and principles which must be followed. Double entry system is the mostly followed. It is a conventional system, means it follows certain rules. So it is more traditional and conventional system of recording transaction. Modern days also uses this system of accounting. This is a scientific method because we are following all the systematic procedures and all the systematic principles is followed under this system. So this is a scientific method. And the basic essence of the double entry system is that every transaction will have two effects. This is known as debit and credit rule. Under GAAP, generally accepted accounting principles, under concepts, we learn dual aspect concept. So dual aspect concept says that every transaction will have two effects. That is, one is the receiver of the benefit and the giver of the benefit. So whatever the transaction occurred in the business, whatever the event occurred in the business, that will have two effects. The one is debit effect and one is credit effect. The double entry system is one The double entry system is the one widely used and recognized in the accounting world. Some salient features of this system are all three types of accounts are maintained in this system. So double entry system is a systematic recording of transactions. The salient features are all three types, that is real account, nominal account and personal account. These are the types of accounts we have in double entry system. The arithmetical accuracy of the financial records are verified by preparing the trial balance. Here, it is a systematic way, accounting cycle, complete accounting cycle is followed. The arithmetical accuracy, it comes from trial balance. The system does not have many modifications. It allows for the preparation of balance sheet, which will reflect the financial position of the organization. So it prepares the balance sheet as well. So that is the final report. In order to know the financial position of the business, we prepare the balance sheet, and easy to detect the frauds and errors in this double entry system. So under single entry system, so they are not following systematic way of accounting. Just they are recording the transactions all together in rough notebook, that is a personal nature and business transactions. And one more, they are maintaining cash book. So they are not following the systematic method to record the transaction. Hence, it is not easy to detect the errors. Altogether, they are making note on rough notes. So while coming to the double entry, under double entry system, they will follow systematic method, that is accounting, complete accounting cycle is followed. So any error occurred or any fraud, so it is easy to detect the frauds or errors. So any error occurred because while preparing trial balance, so we should get arithmetic accuracy. That means debit must be equal to credit. So when it is not happening, we will cross refer. Again, we will go back to the ledger accounts. If we are unable to detect the error in ledger account, obviously we will go back to journal entries. So we will find out any transaction is recorded wrongly. So in this way, it gives the persons, accountants, to detect the frauds. So it is a systematic way of recording the transactions. Usually in modern days, so every firm and many companies, they are following double entry system. So coming to the basis of accounting. So usually under system of accounting, whether it is a single entry system or double entry system, they will follow. So coming to the basis of accounting, what basis they have to follow, whether it is a cash basis or accrual basis. So this deals with the timings of the revenue recognition. Under basis of accounting, we have two types of accounting basis, cash basis and one more is accrual basis. This deals with the timing of the revenue recognition, that is, when should the revenue be recognized in the books of accounts? There are two approaches to this dilemma, cash basis of accounting and accrual basis of accounting. So what is revenue? So revenue is income, profit gained by the company or organization. So whether they have to follow when it is recognized and actually in the books of account, or else the amount due. So accrual basis they have to adopt. So coming to the cash basis of accounting, this is the simpler, uncomplicated approach under the cash system of accounting. And income will be recorded when it comes in. So an income will be earned when it is received in cash by the organization. And similarly, the expenses will also be recorded only when they are actually made. So under cash basis of accounting, complete cash transactions. So amount paid immediately. So when we purchase any asset into the organization, if we are making immediate payment, that is called as cash transaction, cash dealings. Means as and when the transaction occurs, the cash dealings we are making. The cash payments, cash receipts. As when the transaction occurs, that is immediately happening. So completely the transaction is on cash basis. So take for example, Organization pays the salaries of its employees for the month of June. So on the 3rd of July. This salary expense will thus be recorded in July. For example, the amount due to pay is on June. The amount is payable in the month of June, but when they are making the payment in the month of July. So in the month of July only, as and when they are paying the cash, so then only they are recording the transaction. That is purely when the cash payment is done, immediately the transaction is taken into consideration. So this salary expense will first be recorded in July, although expense is for the period of June. So actually the amount is payable in the month of June, but they are paying that amount in the month of July. So the transaction they record actually the transaction we are writing as and when the cash payment is done. Similarly, say the organizations made a credit sale on 5th August. They received the payment on 11th October. So this sale will be recorded on this date. So when the organization making credit sales, so on 5th August they make credit sales. They received the payment on 11th October. Means for the month of August when they are making credit sale, they are receiving the amount, actual amount on October. So when they are receiving that amount on October 11th. So actually we are receiving that amount on October 11th. So for that period only, for that month only they are recording. So immediate cash payments and immediate cash receipts. As and when that the cash is realized, then only they are writing the transactions. So this is completely cash basis of accounting. And the accrual basis of accounting. Accrual basis is the more logical and scientific approach to accounting. This is the method most organizations choose to adopt, as it gives a more fair representation of the financial position of the company. In the accrual system, the revenues and expenses are recorded or recognized in the time period in which they occur, not when the money actually comes in. So the income will be recorded if it is earned irrespective of whether the payment has come in or not. And the expense is recorded when it becomes due, irrespective of whether it has been paid. So under accrual system, so it is completely opposite to the cash system of accounting. Under cash system of accounting, as and when the cash payment is done, they are recording the transaction. But under accrual basis of accounting, as and when that event occurs, means in the last example, so sales, credit sales on 5th August, but the actual amount is received on 11th October. Under cash system, they record on 11th October. The transaction is effected on 11th October under cash system. But under accrual system, so that transaction will occur on 5th August itself. So that means as and when that expenses occur, that is on 5th August, that expense, that transaction is raised. So that date we have to record under accrual basis of accounting. It is no matter whether we are receiving that amount immediately or amount is paid immediately, but as and when that event occurs, as and when that transaction is occurring, then only we have to record that transaction under accrual system. So in accrual system, all incomes and expenses, cash items and non-cash items like prepaid, outstanding expenses and accrued, advance income will be taken into account. So under accrual system, though the amount is not realized, not received actually, that means amount prepaid. Prepaid amount means that is we are paying in advance. Amount we are paying in advance is called as prepaid expenses. So for that expenditure incurred, though that the expenditure is not incurred, we are paying for that expenditure. Prepaid salaries. For the month of July, we are paying the salaries in June only. That is prepaid salaries. Outstanding expenses means so expenses are still outstanding due to pay. We have not paid that expenses still. They are yet to be paid, but still we record the transaction. So outstanding expenses for the month of July, even if you are paying that outstanding expenses next month, that is on August, we record this outstanding expenses for the month of July itself. So it is no matter with the cash payments. So as and when the transaction arises, as and when that event occurs, we are recording. So it will be taken into account, and the final account will be a true representation of the organization's financial position. So here it gives a true representation because as and when the expenses occur, the month truly we are following. So coming to the golden rules of accounting. So it depends upon the system of accounting whether they are following single entry system or double entry system or cash basis or accrual basis. But coming to the writing of transactions, while recording the transactions, one must keep in mind the golden rules of accounting. So this is purely double entry system of accounting. So under double entry system, due to its dual aspect, dual means two aspects. Every transaction, it will have two effects, two accounts, one of which is debited and other is credited. Here, whenever the transaction occurs, it will have two effects, two aspects. One aspect is debited and one aspect is credited. To record the transactions in the journal, so we have to learn the golden rules of accounting in order to record the transactions in journal. So in a sequential way. So sequential way means here we are following certain rules, certain procedures. That is, rule is implemented here. What is to be debited and what is to be credited. Certain rules are required, and these rules are called as golden rules of accounting. As far as the business transactions are concerned, they are divided into three categories. So the business transactions, we have been talking about the transactions. The business transactions include three types. So that is personal transactions. The transactions related to the persons. It is a personal transaction. Transactions related to business assets. So business will invest some amount on assets in order to run the business, in order to conduct the business. They have to bring some assets. They should bring some assets. So that is investment on assets. And transactions related to expenses, losses, incomes, and gains. It is very common. So any business or any company, in order to maintain, in order to run their business, they have to incur certain expenses and losses. And they will again get some incomes and gains. So these are the three types of transactions. Usually business transactions will be under three categories. That is personal transaction, and the transactions related to the business assets, and the transactions related to expenses and losses, and incomes and gains. So personal transactions are recorded in a personal account. So transactions concerning assets and properties are covered under real account. And lastly, transactions related to expenses, losses, incomes, and gains are considered in nominal account. So in short, the golden rules of accounting, it is classified the types of accounts. Types of accounts means every transaction will be of a certain nature. Nature of transaction. Transaction defines certain nature. So it is according to the type of nature we divide into accounts. That is personal account, that is personal transactions, and impersonal account, that is not related to the persons. Transactions related to the person and transactions not related to the persons is impersonal account. So types of account, according to the types of account, we have specified certain golden rules of debit and credit. So types of accounts is divided into personal account and impersonal account. Under personal account, again it is categorized into three types. That is natural person, artificial person, representative person. Under personal account, three types again: natural person, artificial person, and representative person. So what is natural? Natural person means natural persons. So amount received from Ramu. Ramu is a natural person. Amount paid to Rani. So Rani is a natural person. So natural transactions relating to the persons, it is considered as natural persons. What is artificial personal then? Artificial persons means some companies and banking institutes, they run their business, they run their institutes on the name of persons. So for example, Reliance, Reliance is the name. So they run on the name of a person. So artificial, it becomes artificial. All the transactions are recorded under the name of the company. So all the business transactions, whatever the transaction affects, that is recorded under the name of the company. Under the company's account, we are recording the transaction. Hence, it is becoming artificial person. Coming to the representative personal account. Representative, someone we are representing to. So to some person we are representing to. Salaries payable. So salaries are payable to certain persons. We are representing some person here. So coming to the impersonal account. Impersonal accounts are two types again. It is real account and nominal account. So coming to the types of account, personal accounts that deals with persons, that is human beings, and artificial judicial persons such as companies. So it is the artificial person. Account deals with persons, that is human beings, and artificial persons such as companies' names, government organization, HUF, Hindu Undivided Family, HUF means. So natural personal accounts. Accounts that are concerned with natural human beings are called as natural personal accounts. It includes accounts of debtors. Debtors. Who are debtors? Debtors are the persons who make purchases from our company on credit basis. Debtors are the persons who make purchases from our company on credit basis. Means here these persons, debtors are due to pay, they are owing to pay to our business. They have to pay amount because they are making credit purchases. They are owing to pay to the business. So these are the persons. So we deal with directly transactions with the debtors. They become the natural persons. And the creditors. Creditors means from whom the business owes, to whom the business owes, from whom the business purchases the material on credit basis. Then they become the creditors. And the proprietor or the owner or the investor or the shareholder is also a natural person. So coming to the artificial person account, all the business concerns has a separate legal entity in the eyes of law, and so the entities are different from its members. So here artificial person already we have discussed. Some institutions they run in the name of a person. Though they run in the name of person, they will have separate legal entity under the eyes of law. Means it is recognized as a person. So they can conduct on the name of that person. They can conduct the business on the name of that person. So they become the artificial person. Means whatever the transaction is taking place, that we are recording on that person's name, artificial person's account. We are preparing that artificial person account. All the transactions debited and credited into that account. Therefore, The accounts of clerks, charitable trusts, companies, some banking institutes are covered under this category. They are the artificial persons. And representative personal account. The accounts which we represent persons or group thereof are called representative personal accounts, such as capital account. So we are recording capital when the proprietor invests capital. He invests the amount in the business in the form of capital. Is bringing capital. So that is investment made by the proprietor. So capital is indirectly provided by the proprietor here. So capital becomes a creditor. The proprietor becomes creditor to the business. So what he is bringing? So capital he is bringing. So investment made by the proprietor. So he is a representative. Who is the representative of this capital? The representative is owner himself. So we are representing to certain, this capital is representing to some person. So it becomes representative personal account. And then drawings. Drawings is made by the owner himself. So in the business, usually sometimes the person, the owner draws amount from the business account. So drawings are made by the proprietor himself. So drawings are referring, we are representing, that represents the owner himself. And prepaid outstanding liabilities. As we discussed, the salaries payable. Salaries payable to some person. We are representing, payable means it is payable to some person. It is representing, we are representing that one person is there. So this comes under representative personal account. So the accounts are divided into types of accounts, personal account and impersonal account. So under personal account, again it is natural person, artificial person, representative person. All these three comes under personal account. Under impersonal account, real account and nominal accounts. Altogether, we can say that we have three types of accounts, that is personal account, nominal account and real account. Three types of accounts, personal account, real account and nominal account. And impersonal account we discussed. As the name suggests, it is not related to the person. The transactions which are not related to the persons comes under the category of impersonal account. Under impersonal account, we have real account. Real account covers all the accounts related to firm's assets. So whatever the assets falls under real account. So it includes tangible real account as well as intangible real account. Tangible real account means that we can see, that we can touch. So it includes cash. Cash we can see, cash we can touch, building account, furniture account, investment account. All these comes under real account, tangible real account. So coming to the intangible real account. Intangible means which is opposite to tangible, that we cannot see, that we cannot touch. So that comes under intangible assets. So examples of intangible assets are goodwill, patent and intellectual property. So patent right and intellectual property, that means we are having right on that assets. It is considered as a right, so that cannot be seen. What is goodwill then? So goodwill is a name and fame of the company. Then we will get name of that firm. When it acquires the name, the fame of the company. Usually in the market, if they are producing good quality, best in the market, they are producing best material in the market. Obviously, they will gain good name. Obviously, they will gain good fame in the market. Already established the image. Goodwill is already established the image in the market. For example, Bata showroom is there. So already it's got its recognition in the market. So whenever it comes to the purchase of any footwear, so we will obviously choose Bata showroom. Among all the choices, we prefer one choice. That means why we are preferring? Because it is having good image, it is producing quality products. So that way goodwill is an asset to the organization. It is intangible, we cannot see. But with that image, that company is earning profits. Coming to the nominal account. These accounts are associated with expenses, losses, revenues and gains of the firm, such as rent and rates account, traveling expenses account, the commission received account, interest paid account. So nominal account is purely related with the expenses and losses of the organization and the revenues and gains of the firm. So for example, rents paid. If the firm is under rental basis, they are hired any building in order to run their business. They are hiring any building. So for that purpose, they have to pay the rent. So it is an expense to the firm. Nominal account, all the expenses and losses and revenues and gains. So what are the usually gains of the firm means interest received. If any interest, if they are investing any amount, if they have any fixed deposits in the bank, for that they will receive the interest, that is gain to the firm. So interest received is a gain. So all related expenses and losses and all related revenues and gains comes under this nominal account. So we will see the examples. We will learn to know how to record all these transactions according to golden rules. That is what is to be debited and what is to be credited. In next class, I will explain you on both. We will take a better example and I will explain you on the board. Okay, with this I will end this class. Thank you.